All right, welcome to The Explainer. Today we're diving straight into the invisible architecture that, quite frankly, props up the entire global economy. It's this massive, complex system that literally touches international trade, global politics, and those financial markets we all interact with every single day. And yet, it operates almost entirely behind the scenes. We're going to be unraveling the petrodollar puzzle, which is this absolutely brilliant, complicated web connecting energy, influence, and global finance.
So to kick things off, I want you to imagine a really disruptive, kind of wild hypothetical. What if, let's say, tomorrow morning, the entire world just decided to stop using the US dollar to buy oil? And look, we aren't talking about a sudden shift in, consumer electronics or car trends. We are talking about the very fuel of modern civilization. If that link snapped, the shockwaves would be immediate. I mean, we're talking intense volatility in currency markets, bond yields spiking like crazy, and global supply chains potentially facing a severe liquidity crisis. Because according to pretty much every economist, investor, and government out there, severing the link between oil and the dollar wouldn't just be a market hiccup, it would fundamentally rewrite the balance of global power.
Okay, let's dive into this by taking a quick step back to the post-World War II economic boom. For most of modern history, oil wasn't just, another commodity traded back and forth. It was the absolute prerequisite for progress. That massive wave of industrialization sweeping the globe in the mid-20th century, it was completely, inextricably tethered to the promise of cheap, abundant energy. Bottom line, you simply could not build a modern economy without it.
And that created this huge, compounding global dependency. Securing a steady flow of oil quickly became the ultimate national security priority for basically every modernized nation on Earth. Just think about the sheer infrastructure required to keep a modern state running. We're talking moving goods across oceans, running massive factory sectors, generating baseload electricity for these huge expanding cities, and, maybe most importantly, powering modern militaries. These aren't just nice-to-haves, right? These are the core functions of a sovereign nation. So whenever a single resource becomes this deeply essential to absolutely everyone, one massive question naturally pops up. How is the world actually going to pay for it?
To answer that, we've got to travel back to the 1970s and talk about extreme macroeconomic volatility. The global financial system was totally unmoored. In 1971, the U.S. effectively closed the gold window, which ended the whole Bretton Woods system of fixed exchange rates. Then, boom, the 1973 energy crisis hits, sending oil prices completely skyrocketing and sparking rampant inflation. Governments everywhere were just desperately looking for some kind of stability in this incredibly chaotic landscape. And out of that turbulence, marked by big milestone agreements like the 1974 U.S.-Saudi Economic Pact, a really powerful pattern began to emerge to stabilize those energy markets.
That pattern? It was the US dollar. It basically became the common, universal language of the global oil trade. Whether you were a country in Europe, Asia, South America, it didn't matter. If you wanted to import energy, you almost always needed US dollars to make the deal happen. But here's the thing. This wasn't just about convenience. It introduced some serious friction for other nations. This new macroeconomic reality forced foreign central banks to actively manage their exchange rates and constantly hoard US dollars, literally just to guarantee they could keep their lights on and their factories running.
And this brilliantly illustrates the inevitable domino effect that followed. Because importing countries constantly needed dollars to buy oil, banks and multinational companies were forced to hold massive amounts of dollar liquidity right on their balance sheets, which of course naturally led governments to actively build up their national dollar reserves to protect against any future currency shocks. So the constant, unbreakable demand for physical oil fundamentally reinforced a constant, unbreakable global demand for the U.S. currency.
Think of it like this. Imagine a massive global supermarket where absolutely everyone has to shop to survive. But there's a catch. They only accept one specific type of coupon at the register. Everyone shopping there would need to get their hands on those exact coupons no matter where they lived. In sophisticated economic terms, the oil market created an absolutely unprecedented level of artificial demand for the US dollar. Because so many countries needed oil, and so much of it was traded exclusively in one currency, the dollar essentially cemented this unparalleled reserve currency status across the entire globe.
But hey, the story doesn't just stop when the oil gets bought. When these oil-exporting nations sold their energy, they generated massive trade surpluses. We are talking about a totally unprecedented transfer of global capital here. This created vast pools of sovereign wealth that couldn't just, sit idle in a giant vault somewhere. That capital had to be deployed.
So the crucial point here introduces a concept economists call petrodollar recycling. And it's exactly what it sounds like. It's the process where oil buyers send their dollars to exporters for energy, and then those exporters take those exact same dollars and reinvest them right back into global financial markets. It created this giant, continuous financial loop that seamlessly hooked the energy sector directly into global finance.
If we look mechanically at how this recycling engine worked, the impact was profound. The money flows out to pay for the energy, and then flows right back into the system through investments. This loop actually acted as a massive shock absorber for the global economy. By funneling all that capital back into Western financial institutions, Petrodollar Recycling provided this crucial liquidity that helped stabilize the U.S. and global financial systems during periods of really intense economic turbulence.
So where exactly were these billions of dollars going? Honestly, everywhere. Here's a really surprising historical fact. Throughout the late 1970s and 80s, recycled petrodollars stealthily funded massive portions of U.S. government debt. This was often managed quietly by major Western banks to prevent market panic. Exporters also poured these funds into global stock markets, huge real estate portfolios, and international infrastructure booms. The sheer volume of this recycled wealth provided the foundational capital for decades of international trade.
Okay, so what does this all mean for the balance of global power? Well, it wasn't just about the physical barrels of oil anymore. It was really about influence. By linking the world's most important commodity to a single currency, it created these immense financial networks. And in the global economy, financial networks equate directly to geopolitical power. Being at the absolute center of this system grants the ability to deploy powerful economic sanctions, monitor international trade flows, and largely control the movement of capital across borders.
Now, what's really interesting is comparing global financial networks to something like social media platforms. With social media, the biggest platform isn't always objectively the best one from a purely technical standpoint. But once billions of people are already on it, the network effect totally takes over. Switching to a new platform becomes incredibly difficult. Global finance works the exact same way. Scale creates momentum. The more institutions that rely on a financial system, the harder that deeply embedded system becomes to replace or bypass.
Which leads us to the absolute core lesson from our source material today. The most powerful forces in the world are often invisible. Economic dominance isn't just about who has the most physical resources buried in the ground. It's about the systems, the rules, and the incentives. Structures like global shipping routes, international payment messaging systems like SWIFT, and reserve currencies, they quietly but forcefully dictate how money moves across our planet. Whoever helps build and maintain those structures gains a strategic advantage far, far beyond what their size alone would suggest.
But bringing this explainer to the present moment, we've got to acknowledge that the global economy is constantly evolving. Right now, that old architecture is actively being tested. Shifting geopolitical alliances, the rapid rise of alternative digital payment systems, and technological advancements pushing the whole world toward renewable energy sources, all of these things are directly challenging the long-standing dynamic of the petrodollar.
And this evolving landscape raises some entirely new, absolutely massive questions. Like, what happens to this financial loop if the world successfully decreases its overall dependence on fossil fuels? We're also seeing a very tangible shift where some nations are actively striking bilateral trade agreements in local currencies. They're trading oil in yuan or rupees, intentionally diversifying how they settle transactions to avoid relying on a single network. The status quo is undeniably being challenged right now by emerging economies seeking more financial autonomy.
So, why does this matter to you? It's simple. Understanding this puzzle is literally the key to reading the daily news, figuring out the roots of domestic inflation, and making sense of all the complex global conflicts happening today. For decades, the energy trade reinforced the importance of the dollar, shaping investments and international influence. They became completely, seamlessly interconnected. If you really want to understand how global power actually works, you can't just follow the physical oil. You have to follow the money.
So I'm going to leave you with this one lingering thought. As the world changes, will the existing petrodollar system remain largely the same? Will it slowly fragment into smaller regional networks? Or is an entirely new financial order going to emerge to take its place? Nobody knows for sure, but man, it is a fascinating puzzle to watch unfold. If you enjoy uncovering the hidden systems behind global economics, definitely subscribe for more explainers. Thanks so much for joining me today, and I'll see you in the next one.